Hello, tonight we're going to be talking about superannuation, our self-managed super funds, and this information I'm going to be talking about. Please do not constitute it that is going to be financial advice or anything like that. All the information I'm presenting here are facts being taken from the internet, and then the cash flows are also numbers we put together in regards to how this could work for you if you decide to go ahead. So very clear that this is not financial advice, it's purely information after you decide to go to the next step. If you wish to, you'll be talking to a financial planner, a finance person, property consultant, even accountants if you want, just to make sure that this suits what you wish to do. So the first slide we've got here is a slide as far as the ASX, Australian All Ordinaries in the share market, and there's a graph here that starts from 2004 up to 2016. As you can see here, around about 2006 2007, the All Ordinaries were around about 6,500 points. Just before the stock market collapsed was around 5,040, and then went down free fall to around about 3,400 points. Since 2008 up until 2016, hasn't recovered to what it was in those times. So it's about 9 years and everything is as it was. The next slide here is the Dow Jones Industrial Average performance just before the 2008 collapse. The shares here were around about 14,000 points. It dropped to around about 6,500 points, but through the years it's recovered and now it's around about 22,000 points. So it's done quite a substantial performance in that time and well overtaken what it was in the highest time back in 2007. The next slide here we're talking about is the median house price in New South Wales, which is 1.15 million, and Melbourne around about $822,000. The next slide here talks about different prices, different stages in different states in Australia. 1995, New South Wales average price was $157,000. Victoria was $110,000. New South Wales in 2008 was $391,000 average. Victoria was around $350,000. 2015, which is 20 years or around about 9 years from when the stock market collapsed, New South Wales grew to $550,000. Victoria around $452,000. And the last 2 years has done quite a substantial amount of growth. But let's just leave it there. So you can see what happened 20 years ago, 22 years ago from now, around about the time of the GFC property and what's happened during that time. Now I've done an example here, cash flow. If you had $150,000 in your super fund and you put it into a self-managed super fund and you bought an investment property worth $500,000, your combined income, $100,000, the loan of $350,000, the total income that the property would give you or would give the super fund would be the rent. I'm taking 4% as the rate of return, even though the return is around about 4.5% to 5% here in Victoria. So call it $20,000, 4% of $500,000. Employee contributions of 9.5% is $9,500. So total income on the two incomes is $29,500. The expenses here, we're talking interest, we're talking around about 5%, $17,500. All other costs and expenses, council rates, water rates, $1,500. Insurance on the property, $1,000. Landlord insurance, around $272,000. Management fee at 7%, $1,400. And all tax and audits on the super fund, call it around $2,000. Total expenses, $23,620. So we've got total income of $29,500, $23,620 in expenses. So that means that your super money, best at work, if it was put in the property, you'd end up with a bit of extra money. But we're looking here at the safety, I guess safety because of stock market crash and that, and property could lead to this property here could be worth in the next 10 years double or $1 million. So your $150,000 investment could be turned into $1 million in the next 10 years. It's very important to try and understand where you're at financially now by doing a financial wealth check to make sure that you understand where you're at. If you don't know where you're at, you really can't tell or where you're going to be. So if you know where you're at, where you want to be in the time frame, then we could possibly help you. So that's it for tonight. Thank you.